This week's headlines were screaming the bear market has started, but zoom into the lower time frames and the footprints were clear. Asia flipped session behaviour, levels kept getting defended, and options expiry pulled price into max pain around 110k. While the noise was everywhere, the model still gave us structure to work with. Jared's macro blog challenged mainstream narrative. Pedro and Annii cut through the influencer hype with liquidity zones that actually matter, and the community found some really clean setups even in the chop. Hi, my name is Janet and this is Trade Travel Chill. If you're new here, welcome. If you're returning, welcome back. Be sure to hit the like and subscribe button so you can be notified every time I upload a new video. In this breakdown, we're going to map it all day by day so you can see how the TBD system picked up and what the higher time frames were hiding. Let's get into it. Let's start with Monday's move. Asia came in with a bang, tanking BTC by about 3.5%. This is important because it's a change in Asia's usual session behaviour, which has been occurring over the last 3 weeks. Typically, we might expect more of a range, but this kind of aggressive drop set the tone for the rest of the day. Knowing that Asia has run a trend, or clearly just fallen out the bottom, we know that there's a good possibility that UK or US session might consolidate. UK session followed with consolidation, and then US didn't give us much either. So the big takeaway here for Monday's price action is when Asia shocks the market like this, it often leaves UK and US reactive instead of leading. Now when it comes to the model we trade, we know that this plays out on all time frames. It starts off with a reversal pattern. This can be your M, your W, trapping volume formations, half Batman, some sort of reversal pattern. From there, what will follow is your rise or drop levels. So if we're looking at this as a drop level 1, usually what you'll see is 3 hits of volume within that level before price then goes into a retracement or board meeting or consolidation. Going back to the 3 hits of volume within a level, sometimes this can present as 3 drop levels on a lower time frame. So if we go back to the peak formation high, this was the high of the week that gave us the multi-session M formation on the 1 hour time frame. We then had a drop level 1, 2 and 3 on the 15-minute time frame, giving us a drop level 1 for the 1 hour time frame. You can see that the weekend trap gave us this part of the model for the 1 hour time frame. So instead of the retracement, price just consolidated. And what we have on Monday is the completion of another drop level. So I've marked this out on the 15-minute time frame, but you can see how those 3 hits in volume gave us this part of the model we trade, which is the drop level 2 for the 1 hour time frame. But staying with the 15-minute time frame, we can clearly see that Asia has broken the low of the week, which is one of our key levels, whilst at the same time setting the initial low of the day, which would become the low of the day for the next day. Now, alongside the charts, let's bring in Jared's macro blog for the day. He tackled a really common myth that interest rates are what drive the housing market. His argument is that it's actually job incomes and macro conditions that set the tone. He points out how mortgage rates have dropped to their lowest in a year, but instead of sparking demand, housing activity is collapsing. Permits are down 5 months straight, builders are cutting prices, and sentiment is weak. That doesn't signal recovery, it signals stress. And here's the critical point. Rates fall because the economy is weakening. Investors pile into treasuries for safety, yields drop, and mortgage rates follow. That doesn't mean the market is healthier, it means risk is rising. Jared even compares today to the mid-2000s. Back then, the Fed cut rates aggressively, but housing still collapsed because jobs and income security were the real drivers. The lesson is clear. Lower rates don't rescue housing. They accompany bust. So for us as traders, the macro signal is this. Just because yields and mortgage rates fall doesn't mean the system is stronger. It means capital is bracing for weakness. Pedro came in with a strong perspective too. He talked about the recent market drop as a buying opportunity, but with caution that the flush might not be over yet. He highlighted the leverage wipeout and explained how there's usually follow through after that initial flush. Then he broke down his bullish view. He doesn't think we're in a bear market or even starting one. Instead, every dip is a chance to accumulate. And he also touched on the dino coins, the old projects everyone has written off but that are slowly climbing. He calls this an accumulation phase that stretches out over the long term. So Monday wrapped up with a strong message. On one hand, macro is flashing red flags and has been for the longest time with housing and jobs, but on the other hand, within crypto itself, flushes are being seen as opportunities by seasoned traders. Tuesday opened with Asia pushing early to the downside, but once again we bounced off the previous low of the day. That bounce was key because a lot of us recognize that as a multi-session, multi-day W formation. From there, Asia reversed price to the upside, and at that point, our trades were looking good. But here's where patience and discipline get tested. Normally, after a reversal pattern like this, we want to see a clean break of the 50 EMA, which is the yellow line on my chart, and a move higher to break the center peak of the W formation. This essentially gives us a change in market structure. And we didn't get either of those. No volume through the 50 EMA and no break of the center peak. So anyone who had taken long from Asia's double bottom, stop losses were either moved to break even or those longs were closed out early. UK session then gave us more consolidation and US session came in completely reversed Asia's move, only to bounce back again off the low of the day. That gave us 3 touches to the low of the day across session. And this was becoming a clear level the market was defending. Now this lines up really well with Annie's video for the day. She broke down what she needs to see from current price action before she can turn bullish, tying it back to Jared's weekly setup data. But she also cautioned us there's still plenty of room for downside to complete the 1 hour model, and she highlighted exactly what she'd be watching for as confirmation of further weakness. Her main point was around the 90k level that a lot of influencers are calling for. She made it clear that this isn't a target worth paying attention to because there's no liquidity there. Instead, the first real area of interest is closer to the 110k, which aligns with the daily 50 EMA. So while Tuesday's intraday moves teased a reversal, Annie reminded us not to get too caught up in the hype levels and instead to stay focused on the liquidity zones and structure that actually matter. Now let's head into Wednesday because Wednesday gave us really interesting structure to work with. After Tuesday's repeated bounces off the low of the day, we came into the 30-minute gap just before Asia session, which is one of the best times to catch entries, with signs of a potential higher low forming with the blue hammer there. That was a clue that a long opportunity might be setting up. And again, I opened a long position here, and I believe many of the community did as well. We did get volume through the 50 EMA early on, but once again, there was just no follow through, no strength in the move, and price rolled over. That forced disciplined traders to either close positions or shift stops to break even, protecting capital. So my stop loss ended up getting moved just under the hammer, so I had a small loss here. Then Asia came in with another stop hunt, driving price below the low of the day and shaking out long while inducing short position. But here's the trap, that move set up for another long entry. From there, we do see Asia reverse price to the upside and we get volume through the 50 EMA. From there, UK session stayed relatively flat, but the US session gave us that extended move, giving traders who held their positions some nice follow through. Now here's the thing, you might be wondering, why is this girl trying to catch so many long positions? Like I tried here, I tried again here, and I tried again here. The reason is because when it comes to the model we trade, there are times where you're not always going to get the third rise or drop level, and you may only get 2. And at this point, we were in this phase here. The times where you may only get 2 rises or 2 drop levels is when it comes to the retracement phase of the cycle. So then you have to zoom out to the higher time frame. So let's go back to this part here. If all of this was a rise level for the 4-hour time frame, then there's a chance that we don't get all 3 drop levels on the 1-hour time frame if it is just a retracement for the 4-hour time frame. Hopefully that's not too confusing. But if you get the 2 drop levels on your lower time frame, this is where you would be open to looking for a reversal pattern, as that would create the higher low for the 4-hour time frame. So let me show you what I mean on the 4-hour time frame. If we take a fib from the peak formation low to the peak formation high, and I am looking at this as a rise level 1 for the 4-hour time frame, then I am looking for areas where price may retrace to create a higher low and prove the move before more upside. At the time of hunting for all of those longs on the lower time frame, you can see price was holding around the golden pocket or 61.8 fib level. So for me, it was a case of I'm going to try and try again until the setup becomes invalidated. So after Wednesday's move to the upside, if we zoom out to the 1 hour time frame, it's clear to see that what we had is a higher time frame consolidation range. What we got was a stop hunt below that induced short positions would have triggered sell stop and taken out long positions before price quickly reversed, took out any traders who had gone short, whilst at the same time inducing long positions or triggering buy stop, before price then pulled back into the range. When price made this move to the upside, we also hit into some large sell orders that were sitting in this area. In order to remain bullish from here, we would have wanted price to create a higher low and then make it back above the low of the week and the 200 EMA. However, failing to do that leaves us at risk of drop level 3 happening. So what I'm trying to get through here is the market doesn't always give us 3 levels, sometimes 2 is enough. And what matters most is that we're reading structure in real time, staying cautiously bullish but with clear invalidation points. This is a classic example of why patience and adaptability matter in this system. So moving on to Thursday's price action. Thursday opened with a fresh high of the day, which is the highest point price went to the previous day. And what followed from here was a short setup, if you knew what you were looking for. Right away, dead gap zone gave us the initial high of the day. Within the 30-minute gap prior to the Asia Open, we can see that price tried to repeat the level but failed, which gave us confidence that the initial high of the day might hold and set up a short entry. Asia then ran a trend to the downside again, while UK mostly consolidated before giving us some volatility around the session changeover. For anyone that had gone long from the stop hunt here, some people may have moved their stop losses to break even. However, for myself, I left my stop loss where it was because this area here was the trap traders. By the end of the UK session, this is where I had given up hope that the long was going to play out, and I was looking for price to give me a retracement up to around 50% Asia to give me a chance to exit my long before continuation to the downside. And the reason I was leaning towards more downside, because if this was going to be the W formation, then price doesn't hang around in trapped traders zones, giving trapped short traders a chance to exit at break even, or giving long traders the chance to think about their position for an hour before pulling away. When we get W formation, price will pull away fast. So with the long position taken out and any trapped short traders in this wick here release, we see US session continue that move to the downside, giving us drop level 3 for the 1 hour time frame. And again, this is where you can see the 3 hits within the level that make up the 1 hour drop level 3. So when we go back to the 1 hour time frame, peak formation high, we have our M formation, drop level 1, consolidation, drop level 2, a widening of the range boardroom with stop hunts both sides before a drop level 3, whilst at the same time giving us a new low of the day. This is a textbook example of how sessions layer into each other. Asia has been running a trend, which is usually UK's job. UK has been consolidating, and US has been bringing the volatility that finalizes the structure. And Annii really put this move into context with her breakdown. She talked about the dominances and how they were lining up with the stock options expiry, something a lot of traders overlook. She dove deep into BTC options expiry and explained why it matters for both volatility and positioning. Then she shifted into Ethereum, using it as the perfect example of when retail patterns tend to fail. Ethereum gave us a clean case study of retail longs piling in at the wrong place and getting trapped. So while Thursday's chart gave us the technical confirmation of drop level 3, Annie's video explained the macro behavioral context, options expiries, retail psychology, and dominance shifts that all amplified the move. If you need an exchange to trade on, consider checking out WEEX. What I really like about WEEX is that it's clean, simple, and built for traders who want to focus on the actual trade without being distracted by a messy platform. Execution is fast and the interface is smooth. And here's the best part, if you create your account using the link in the description, you'll automatically unlock VIP2 trading level, which is the equivalent of a 25% discount on your trading fees. That's a pretty big edge if you're trading consistently, because it means more of your profits stay in your account. So if you haven't already, use the link below to check out WEEX and give it a try for your futures trading. Alright, so let's shift gears and talk about one of my favourite parts of these wrap-ups, the community wins. This week wasn't just about BTC structure playing out, it was about how our traders in the TTC community spotted opportunities, managed risk, and executed clean setups using the TBD system. Let me show you a few stands out. So I love this one from Gal Snap because she included her chart showing where she entered and exited her positions. So let's have a look at these. So Nat was long as well from the areas that I showed you previously. She then took her profits on the long position, then entered the short position based on the one that I had showed you earlier, banking 4% on her BTC long while using the WEEX exchange and banking 12% on her BTC short whilst using Pionex. You'll notice that a lot of our traders in TTC use multiple exchanges to trade on, not only to spread their risk, but because they have different intentions behind those trades. We could open 2 to 3 trades at the same time on different exchanges for different reasons. One might be to scalp and take 100% profit on that trade, whilst the other one might be a coin margin trade, and another one a perpetual where we think we have caught the pivot low that could potentially lead us into the next major move for the bull market. So if you don't have a WEEX or Pionex account, consider using the link below to create your very own account to take advantage of those trading discounts. We have Emilion Mark banking 132% on AVAX along with his chart and nailing what looks to be at least a 10-to-1 trade. Nice trade on that one, Mark. We have Senate Invest on BitGet, trading Master, Mooding, Pingu, and BTC. We have Argyle the Fixer, who took a 15-minute W in confluence with the 200 EMA. He has booked 75% and has left his runners to run. It's a beautiful trade. Then we have the Dad on Tequila with 107% on Q&T. And that's what I love. It's not just Annii and the cabin crew calling these trades. It's the entire community applying the same system and finding their own wins. Now let's bring it back to Friday's price action. Friday was one of those sessions where things get tricky if you're not familiar with the reversal patterns inside the TBD system. By this point, BTC was sitting around the 110k region. That level mattered because it lined up with the max pain price for options expiry, with over 17 billion worth of contracts expiring. The same goes for Solana, where price was hovering around 195, as well as Ethereum sitting around 3800, with 3800 being its max pain price as well. This was the conversation we were having in Discord, and these were my thoughts whilst we were still in the Asia session on Friday. My ideal scenario was for Asia extension to be to the downside, and at the gap session changeover we see multi-session W. The second scenario would be for Asia to give us volume through the EMAs, and the expiry volatility provides a retest of the EMAs. So when we come back to the charts, we can see Asia gave us a move to the downside. The low of the day remains intact. At the start of the UK session within the first hour, this is when the options expire, and once that expires, price is free to move and do what it wants. However, going back to what I said here, I mentioned either way, both scenarios are bullish. If you are not an aggressive trader, then wait for conservative entries. Now, the perfect patterns we can easily identify, which are our W formation, our V bottoms, and final damage W formation. However, Asia, UK, and even US didn't really give us much directional flow. This is exactly where traders need to recognize the markings of a trapping volume formation. A trapping volume formation can present a couple of different ways. The trapping volume formation that we're most familiar with is when we get the large move to the downside, a clear stopping volume candle that traps any short traders in this wick here, and then price quickly pulls back against the move and goes into that extended period of consolidation. Ideally, price fails to return to the trapped traders zone, which gives you the hint that they are keeping these traders trapped for a reason before they shift price out. However, the trapping volume formation that we're starting to see form over Friday and potentially the weekend looks more so like this trapping volume formation here, where there is no clear trap traders zone to the downside and price is just going into that extended period of consolidation. There's also another example here. So when we look at Friday's price action, we have the makings of a trapping volume formation. When it comes to entering the trapping volume formation, usually there is a clear area for you to place your stop loss. So you would be taking a long position every time it came back to retest the bottom bottom of the extended period of consolidation with a stop loss below the peak formation low in anticipation that this is going to break out to the upside. However, with this scenario, your stop loss goes under the low of the day. So I believe there were many traders in our community who caught this long position, and if they didn't, the next entry, which is still an aggressive entry in my opinion, is the W formation that formed near the end of the extended period of consolidation. The conservative entry is to wait for price to break out and come back to retest the EMAs. This is where Annie's live stream really tied it all together. She broke down the bigger picture, not just the lower time frame BTC setups, but the higher time frame context as well. She explained how 1 billion in liquidations can actually be bullish because it clears out leverage positions, resets the market, and sets the stage for new moves. She also reinforced what she wants to see from BTC on both higher and lower time frames before she's fully confident in direction. So while the charts on Friday looked choppy, Annie's session gave the community the perspective. The flush was healthy, options expiry was engineered pain, and now it's about watching how BTC react in the next phase. And you know what? This week reminded us that trading isn't about being right on every attempt. It's about managing risk while you figure out if the move is real. We had moments where longs looked good, defended the lows, reversal patterns, volume through the 50 EMA, but the follow through wasn't there. That meant either getting stopped at break even or closing positions early. And that's fine because those small scratches gave us the information we needed to see the bigger picture forming. By the time drop level 3 completed on the 1 hour time frame and options expiry pinned price around that 110k area, the structure was clear, not because we predicted it perfectly from the start, but because we stayed flexible, followed the model, and didn't let early losses turn into bigger ones, while at the same time not getting distracted by social media influencer hype calling for 90k and staying focused on the model, what we were looking for on the higher time frame, while hunting out entries on the lower time frame. That's the difference. Most traders get caught forcing trades or holding on to hope. The ones who followed the TBD rules were able to pivot, adapt, and finish the week with clean wins, even if it took a couple of attempts to get there. And that's exactly what we teach inside Trade Travel Chill. Our members get access to the full TBD system, live sessions, and the community that helps you stay disciplined when the market is messy. If you're serious about learning how to trade this properly instead of guessing, consider grabbing yourself a membership. We have a 48-hour money-back guarantee. To join us, use the link in the description below. So if I could leave you with one thing going into next week, it's not about calling every move, it's about protecting capital until the right one confirms.